Cement is in focus, and what are the plans going ahead with respect to the company, the sectoral picture when it comes to the price hike. Let's understand all of that, and we are being joined by Mr. Anuj Khandelwal, who is the business head Grey Cement of JK Cements, joining us on the show. A very good morning, Mr. Khandelwal, and thank you so much for your time. And first up, with respect to your earnings, you reported a strong set of numbers in Q3. Firstly, could you explain the key drivers behind this performance and how sustainable is this growth going ahead?
Firstly, thanks to the 18 Now team for having me on this segment. Yes, in Q3, we reported a growth of around more than 20% on a year-on-year basis, and we are running at more than 15% on a YTD basis. Given our new capacities coming up in Central, we believe that though we might not be able to post a 20% plus growth every quarter, but it'll be in double digits and certainly more than the industry. We will be using our capacities which have come up in the Central India to expand our market share and grow as much as we can.
All right, good to know about that. But Mr. Khandelwal, what's your overall outlook for the remainder of FY26, that is Q4, and the full year of FY27?
See, the quarter has just started, but as I said in Q4, the demand in January is quite good. So we would try to post a double-digit growth around 10 to 11% in this quarter as well. We hope to do even better. As far as FY27 goes, we will try to post 10 to 12% volume growth in the next year as well.
All right, so 3 to 4% volume growth is what you're envisaging for the upcoming year. That's a decent number. Volume growth to be in single digit, but what about the price hikes, Mr. Khandelwal? Because with respect to the market expectation, just after 14th of January, there were some expectations that the overall industry prices will rise. If you can help us have the clear ground picture right now, and what can we pencil in for Q4?
Pricing is quite, is a very, very dynamic as a subject, and it depends on a host of factors. In Q3, overall, the pricing of the industry fell down as we had encountered lower demand, especially in October and November. Some of the fall in prices in Q3 got corrected in the early part of Q4, and depending on how the market dynamics are, the pricing would follow. So pricing is dependent on a lot of things. It's very difficult to hazard a guess on what would be the pricing scenario, but only what I can confirm is that Q3 there was a drop in pricing, and Q4 there has been a slight recovery of that drop.
All right, slight recovery is what you are saying, but we were looking for a number out there. But nevertheless, let's talk about the construction activity. In the first half, that was seen to be a bit muted. But are you now seeing a bit of a pickup in the construction activity?
Seeing a pickup across sectors starting late November and continuing into mid-January for the last 50 days period, and all the indicators are such that it might continue for a few weeks or months more. So yes, you are right that in FY26 in the first few months the demand was not as strong, but it has certainly caught up now.
All right, but now could you provide us a current update on your Jaisalmer plant expansion, including the total capex for this project and the expected timeline for commissioning? If you can give us more details on this.
See, the overall capex of Jaisalmer as well as associated grinding units is around 4,800 odd crores. The work has started, especially on the Jaisalmer unit, few months back, and it is progressing in a fast pace. The timeline in which we are looking at commissioning of Jaisalmer as well as associated grinding units is by, let's say, June of 2027, a month here or there, but basically we are targeting around that time. But happy to state that the work is going on in the right earnest with the right speed.
All right, but out of the 2,000 crores of capex plan, how much has been utilized in the first 9 months of FY26, and where has this been deployed?
9 months, we've spent around 1,500 crores of capex. It is actually split between two parts. One was completing the existing expansions which were going in central India. And then now the later part is on spends related to Jaisalmer and associated grinding units. So around 1,500 crores have been spent in the 9 months in this fiscal year so far.
All right, but are you on track to commence the commercial production at your Rajasthan and Punjab plants in the Q4 FY26, or is there any change in the timeline?
No, so as I said, the Rajasthan as well as the grinding unit in Punjab, which you are mentioning, was slated to, the target has always been June of 2027 or around about that time. It was never supposed to be in Q4 of FY26 because we just started the construction work. However, happy to state that the expansion in central India is nearly completed. We have installed capacity 1 million ton additional in all our three existing plants. Panna, Hamirpur, Prayagraj. We've also commissioned the clinkerization unit in Panna and the greenfield grinding unit in Bihar, likely to commission this quarter. So by the end of this fiscal year, we'll be over 30 million tons in capacity.
All right, good to know that. But with this, Mr. Khandelwal, we let you go. So good having you on the channel today. Thank you so much for your time. All right, so that was the management of JK Cement talking to us about the capex plans, the industry outlook, as well as the volume growth that is envisaged at 3 to 4% in the upcoming financial year. But with this, viewers, it's time now to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.